we interviewed you last year around this time, about a year ago, Bitcoin had just crossed 100K for the first time. Today it's trading at 87K. Why did Bitcoin underperform?
Most people will be followers, but there's always going to be a leader. This is a battle for the future of money. In my opinion, we have the world's greatest product. The number one way to destroy or undermine your first idea for the 30 trillion is to come up with a second idea and get distracted. Want to look at the history of failure? It's alpha males that solved one thing and think that that's solved and done, and they come up with 10 more things to solve. The most important days of your life, the day you're born and the day you figure out why.
Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorne.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
Bitcoin's the best crypto asset.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. I'm Alex Thorne, head of firm-wide research at Galaxy, and we have a great episode for you this week. Phineas and I have just returned from Miami to interview Michael Saylor in his home. Wait till you see this set where we recorded. We're sitting in the Red Room at his house in Miami, and it's really a fascinating interview. I was frankly blown away by the evolution in Michael's thinking and how far beyond the other treasury companies' strategy really is, and how deep he's thinking about strategy's role in the future economy. It's not just a company buying Bitcoin and putting it on its balance sheet. I know you're going to enjoy this interview. And I thought he was characteristically extremely articulate. And I think we talked about AI. We talked about Bitcoin development. I think people who have been following the core versus knots debate in Bitcoin will find his answer on this very interesting. Also, quantum computing. Michael's a very classic optimist about things working out in Bitcoin's favor. Look, before we get into that interview, I need to remind you to please refer to the link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorne, head of firm-wide research at Galaxy. Bitcoin not zero. We have a great episode for you this week. Michael Saylor, chairman and founder of Strategy. Thank you so much for coming back on Galaxy Brains, Michael.
Yeah, thanks for having me.
Well, actually, thanks for having me and us in your home in Miami. It's been quite a ride this year. New all-time highs. Now, I mean, when we interviewed you last year around this time, about a year ago, Bitcoin had just crossed 100K for the first time. Today, it's trading at 87K. Why did Bitcoin underperform this year?
It's the world's greatest free market in capital. And 85% of the Bitcoin, notwithstanding all of the corporations that have been acquiring it that people talk about, BlackRock and Strategy get all the publicity, but 85% of the Bitcoin is held in crypto OG hands. We can't even identify them. And I talk to the traders, they say that, the derivatives market, the perpetual market drives this much more than spot, which means that $1.7 trillion worth of capital that can be 20x or 30x levered is held by people that we don't know. And so I think that that in the near term, their moods and their drivers drive this market. And I guess that's the beauty of free market capitalism. But I think that the more important point is the last 12 months have been probably the best 12 months in the history of the industry in terms of fundamentals. And it's profound what's happened since December.
What would you put at the top of the list there? I mean, I know we've had changes in regulatory environment, different types of institutional adoption. What stands out to you the most?
Well, let's tick off the highlights of the last 12 months. You have a universally supportive administration, a supportive head of the SEC, supportive head of the CFTC, supportive head of the Treasury, supportive president, supportive vice president. You have David Sachs, go out publicly and say, Bitcoin is a digital commodity, it's digital gold, it's an asset without an issuer. We recognize its special nature in the world, as a technology to propagate property rights and freedom. That happened in March of this year, right? People forget how that developed. We saw the spot Bitcoin ETFs get uncrippled. We had in-kind creates and redemptions. People can now swap their Bitcoin for IBIT type shares and borrow against them and then swap back. That was a big deal. We saw the onshore derivatives market for IBIT get uncrippled. It went from nothing to 10 billion. And then when they actually took the cuffs off, it went to 50 billion. That's a big deal. We saw guidance from the CFTC just last week. You can now trade spot crypto assets like Bitcoin on regulated commodities exchanges in the US. You'll see them start trading on the CME. We saw guidance that you could start to use Bitcoin as collateral, right? Crypto assets collateral against those derivatives contracts and trading contracts. That's a big deal. We just saw guidance from the SEC that it's possible for the DTC to tokenize their entire security portfolio. Yeah. We're talking all the securities in the world moving on the DTC. And the fact that that guidance came from the SEC was a big deal. But the fact that the CEO of the DTC got on X and put out a video saying they're enthusiastic about that was a big deal. We saw favorable guidance come out of the IRS and Treasury that made the entire issue of unrealized capital gains tax on crypto assets go away. That's a big deal. We also saw the creation of the digital credit market. My company, started issuing digital credit instruments, and we did an IPO. I guess it's like late January, early February. Then we did a second, a third, a fourth, and a fifth. We did 5 IPOs of digital credit instruments, and that entire market went from nothing to $8 billion in 10 months. And we're pioneering this public digital credit market, but we also saw now an avalanche of conventional banks. We saw guidance, positive guidance from the OCC and the FDIC probably every 2 months. Yeah. For the year, like six salvos. And after the 6th salvo, we started to see the entire dam breaking and the banking industry thaw. And now, off the top of my head, I think we've seen pro-digital assets, pro-crypto, pro-Bitcoin announcements from Citi, Charles Schwab. Both have announced they're going to custody and extend credit on Bitcoin in the coming 6 months. We saw positive announcements from JP Morgan. We saw positive announcements from Bank of America. We saw positive activity from BNY Mellon. We saw, Standard Chartered Bank and PNC Bank both announce agreements with Coinbase, taking advantage of their crypto as a service to custody and handle and trade Bitcoin. I think we saw clear guidance from the OCC that it's okay for banks to handle, hold, and trade and custody crypto assets on the behalf of their customers, right? So 12 months ago, you could barely get a loan against IBIT, right, and you couldn't get any credit against BTC. At this point in time, I think I can count off the top of my head 8 different banks that are offering credit against IBIT, normally in the range of SOFR plus 50 basis points to SOFR plus 75 basis points. And we can see probably 4 banks or more that are starting to suggest they'll move on to start to issue credit against the underlying BTC in the coming year. So that really represents the formation of the credit networks on top of crypto assets. So public credit, banking credit, right? Those are big deals. We also saw the first credit rating. S&P gave us a credit rating this year, and that's for the first time ever. And, I remember when we announced we were buying Bitcoin for our balance sheet, our insurance company dropped us. We couldn't get D&O insurance.
Wow.
And we couldn't get it it was like 3 or 4 years, and they finally unwound that, so I'm not underwriting the D&O insurance for my own company anymore. So, that's a bit of a win. So insurance, I'm not saying we have full-throated insurance acceptance. We surely don't. But what we see, and I left out, the other obvious thing, which is we got fair value accounting.
Yeah.
right? It was impossible to recognize a gain in a digital and asset investment until the year 2025. And I guess beyond that, I guess I would be remiss not to note that I guess 200 publicly traded companies put crypto assets of some sort on their balance sheet this year.
Yep.
And we went to 200 companies that have Bitcoin on their balance sheet. So, and I guess last point, my company I think we raised $23 or $24 billion this year.
Yeah. I think you bought more Bitcoin this year than any year.
Yeah. And so I think if I was looking at the industry fundamentals, right, and you remember what we were talking about a year ago, right? You couldn't have predicted any of these things. If I had predicted all this, you would have said you're being too optimistic, and I don't think I would have been. I don't think I would have been ambitious, or aspirational enough to predict everything that happened. But I would say it's exceeded my expectations at a fundamental level across the board. We couldn't have a more favorable setup for global adoption and institutional adoption of digital assets in general. And by the way, I've been very Bitcoin centric here.
Of course.
If we went on and talked about digital securities, you're at the head of the SEC saying we expect that all securities will be tokenized on chain. That crypto task force was a big deal. The head of the crypto task force taking over the CFTC is a big deal.
Yeah, Mike Selig, yeah.
Right. And I think the embrace and the success of digital currency, the stable coins, is a big deal.
Yep.
And I just got back from the Middle East, and I met with all the sovereigns and the banking regulators, and and all the digital assets innovators, and it couldn't be clearer to me that as enthusiastic as we are in the U.S. about digital assets at this point, they're just as enthusiastic, if not more enthusiastic. And so I think I think we end the year with just a lot of things to be grateful for in this industry.
With that setup, what will be that you think? I mean, that's so many things that if you'd seen one of those headlines 2-3 years ago, you'd see a 20% candle or something on Bitcoin price. Like, what will be the catalyst then for next year with such a good setup? Is it just a matter of working through some of those, like you were talking about the free market, some of those OG sellers, or, markets take time to change their tune? I mean, what's going to take us higher?
I think the drivers would be, my checklist would be, you watch the derivatives market and the way it forms, and that's the offshore derivatives market, the crypto native derivatives market, like, perpetuals, 20x perpetuals, that forming onshore, that's a big deal. Cross margin, Bitcoin is collateral against derivatives in the United States on regulated exchange will be a big deal. So the formation of the commodities markets and the derivatives market and how we integrate regulated markets with offshore markets, I think that'll be a driver. I think the second driver will be the formation of the bank credit networks. When Bitcoin's 90,000 a coin and you're selling 450 coins a day into the market, that's like $40 million of natural supply.
Right.
And you worked it out, and it's like, 16 billion a year or something of supply available from the miners. So $16 billion is a year's supply. Every time a bank creates $16 billion of credit, that's 1 year's supply taken out of circulation. So we're now getting to the point where banks like Citi and Bank of America and JP Morgan and Wells Fargo or Schwab, any of those can create that entire $16 billion worth of credit in 12 months. So you're watching the formation of major credit networks, and you're looking at a $2 trillion asset class that's been unbanked. Mm-hmm. And so as you watch the formation of banking credit, and corporate credit instruments on top of that asset class, that's going to be a big driver. I think the growth of digital credit, public credit, like STRC, Stretch.
Yep.
It's a big driver because in theory, you've got $300 trillion of credit. If you look at the credit markets, bank credit pays you nothing. Treasury credit or money markets, they're paying you 50 basis points in Japan and 100 basis points in Europe and nothing in Switzerland and 370 basis points in the US, and it's probably headed south. Mm-hmm. Corporate credit, junk credit, private credit, mortgage-backed credit, municipal credit. These things are all indexed to the risk-free rates in all those nations. So you look at the traditional credit markets, most people, what they'd like is a bank account that pays them 8% with no duration, no delta, no credit risk, right? That's what they'd like. What they're getting is a bank account that pays them 0 or a money market that pays them 2%. And then they're reaching for yield. And they're reaching for yield by accepting credit risk from a junk bond issuer, or they're going to go buy a 20-year bond they don't want. Nobody wants a 20-year bond or a 10-year bond. What they want is just not to lose their money, right? So the existing credit markets have a lot of very awful choices for people. Either you've got to wait 30 years to get paid and take 30 years of inflation risk, or you've got to bet on some going out of business junk bond, uncollateralized issuer, right? Or you've got to accept nothing and be happy about it, right? And so digital credit is spreading through that market, and the promise of digital credit is, first and foremost, if you want to accept 5 or 10 vol, maybe you get to 10% dividend, right? You might get 10% dividend tax deferred. That's kind of the promise of an STRC.
Right.
But I think the profound idea, right? The big dream of everybody in the Bitcoin industry, everybody in crypto has always been fix the money, fix the world.
Right.
The profound idea is rebuild the entire world's monetary order on digital technology. So you start with this idea of digital assets, which offer the promise of, speed of light between 8 billion computers and 8 billion computers 1 million times an hour in self-custody on an Android phone, 24/7, 365 everywhere, right? That's the digital asset vision, and that applies to digital tokens, digital securities, digital commodities, digital currencies, right? That's what holds the entire digital industry together. And then the next piece of that is building a digital capital structure on top of a digital commodity. That's Bitcoin as store of value. And once you get digital capital, you start thinking the third idea is digital credit. What if I strip 90% of the risk and 90% of the vol off the digital capital by over-collateralizing it 10 to 1? Mm-hmm. What if you issue $1 of digital credit for every $10 of digital capital every year, right? And then the last mile is, what if we just build digital money? And by digital money, I mean, what if we strip the last 5 or 10 vol off the instrument and we make it 0 vol? And maybe instead of 10%, 10 vol, what if I get to 8% 0 vol or 7% 0 vol digital money? And that's the vision of a Bitcoin-backed stablecoin. Right. In the crypto industry. It's like, what if I had a stable coin that paid you 8% backed by Bitcoin? I can't do that backed by sovereign capital. I can't do it with fiat credit. The best you'll ever get to there is 4% or 3%, the risk-free rate. But if I built it on digital capital that was appreciating, I could go to 8%. And I don't know what the magic number is, 8 or 7 or 6, but I think the magic number is 4% better than everything else.
Interesting.
So if you're getting 0 in Japan and someone gives you 4% in yen or 1% in euros, you get 5% in the euro, or 3% in dollars, and you get to 7% in dollars. I think you've just created digital money, and it checks the box of, is it a medium of exchange? Yeah, sure it is, right? It's completely stable versus the world reserve currency, or against whatever you're spending in, right? The euro, the yen. Mm-hmm. Is it a store of value? Well, at the point that you start to clip to 7-8%, you're actually tracking the true theoretical monetary inflation rate, and you're outperforming the CPI. So regardless of what you think of what the true natural inflation is, the general public will perceive it to be a store of value, right? And so now you've got unit account store of value, medium of exchange built on digital capital. And, how do you get there? Well, you take digital credit, a bit of digital credit like STRC, and then you mix that with currency equivalents, the stuff you put in a stable coin. I'm going to give you 1 month T-bills, 20% T-bills and cash equivalents, 80% credit, get to a blended rate of 9%.
Interesting.
Maybe layer on a currency reserve, a volatility reserve buffer of 10%. And you use that, to adjust for the 5 vol or the 10 vol that's in the digital credit instrument. You put shock absorbers, right, on the credit to create money. Now, if you do that, you can, any fund manager, right, anybody that knows how to run a money market fund or any active fund manager, private fund manager, public fund manager, anybody could do this. This is not rocket science. You take 100 million by 80 million of digital credit, 20 million of currency equivalents, layer $10 million of a cash reserve on it. And then every day, at the end of the day, you draw down the reserve to hit the NAV, to get the NAV to be $1.
Right.
Right. And on days when the credit trades up, you replenish the reserve and you can continuously, fund the reserve with, like, maybe you take 100 basis points off the top of the credit and you fund the reserve. Now, if you do that, you can create a stable coin. We can't call it a stable coin. You call it a money coin.
Yeah.
You create a digital money coin that has a NAV of $1. You get the approval of a digital assets regulator. And now you've just tokenized digital money.
Right.
And now you release that into the crypto ecosystem. And now you've got, something that competes with stable coins that pays you 8%.
It's pretty interesting. or you create an ETF. We have ETF money market funds. They have stable NAV. They pay you 4% or 3.8% or 3.5%, right? It's not a new idea. Vanguard, BlackRock, Bitwise. Yeah.
Anybody could create a digital money fund, but now the digital money fund is zero vol, stable NAV, $1 NAV, pays you 8, right? And you could even, the value added there is you convert the monthly dividend of, say, a stretch into a daily dividend.
Right.
You strip the vol, then you get the regulatory approval. You put it on the platform, right? And now you're circulating on the ETF rails. That's digital money fund. But the most ambitious idea, which it's like the heavens opened for me this year, and I just like click, click, click. A year ago I didn't see digital credit, and so if you don't see digital credit, you can't see digital money. But now what I realized is you go to a bank and you create a digital money account. You get the approval of your banking regulator to offer a digital money account, zero vol, powered by digital capital and digital credit, right? And now you just put your money in a digital money account and you get paid 8% daily on the banking system, right? And Barclays or B of A or JP Morgan or Morgan Stanley or, First Bank of Abu Dhabi or Emirates Bank, or fill in your favorite bank, would they do that? I think in the UAE or the USA, you actually have pro-digital assets banking regulators, right? If you have pro-digital assets crypto regulators, check. If you have pro-digital assets security regulators, check. And if you have pro-digital assets banking regulators, check. That won't happen everywhere. But the question is, will it happen anywhere? Because you want to be the digital banking center of the 21st century. The big idea is my bank offers a digital money account and we pay 400 basis points more than every other bank on earth. And then you're not talking about crypto billionaires wiring you billions of dollars. You're talking about fiat billionaires. You're talking about everybody.
And then that goes back into the digital money coin stack. Does that eventually flow into Bitcoin itself?
You buy $10 billion of digital money from your bank, and $8 billion flows into digital credit, and that $8 billion goes into digital capital, and that goes into Bitcoin.
Interesting.
Right? And there's no reason. I mean, what's the market? There's $200 trillion.
Yeah.
Right? There's $200 trillion of bank credit, money market credit, and corporate, type investment credit, and it's all yielding 200 basis points
what does
on
this
average.
do, though, for the ability of sovereigns to issue debt to fund their governments? Surely I wouldn't want to buy the, 1, 2, 10-year treasury if I could buy this.
If you're in the UAE, aren't you really thinking that my bank offers these bank accounts and foreigners wire me $20 trillion to my bank?
It's good for them, but is it good for
Well, the point is it's good.
Yeah.
It's good for the people that do it.
That's right.
Well, like you're asking the question, if I invent cold fusion and I have unlimited free electricity, is that bad for people
oil
that sell expensive oil?
Yeah.
Yeah.
Right.
But it's good for the people that create the unlimited free electricity.
So then
we're talking about the digital transformation of the credit markets. If we offer digital credit that's 5x over collateralized that pays 10% dividends, what's that do for the junk bond issuers that want to pay you 5% uncollateralized?
Right.
Well, look, here's the good news. The world doesn't rationalize overnight. If I gave you, the perfect situation, it still takes a decade before 10% of the world discovers the perfect thing.
So there's time for debt issuers, whether sovereigns or corporates,
This is going to take place over 20 years.
to adapt.
Right? It's the world's going to gradually adapt.
So you amassed this treasury of Bitcoin. Now you've been issuing these digital credit instruments, Stretch, Stride, Strive.
Yeah.
So that's the middle part of the stack to the digital money coin you're talking about. Is Strategy going to take steps? Are you taking steps to issue this money coin, or is it something that you envision, as you've described, that an asset manager or a bank might issue using your credit?
The way I see the industry evolving is there's 3 layers. There's digital capital, there's digital credit, and there's digital money.
Yeah.
Okay? Our company, Strategy, we exist to create the digital credit. In essence, the whole mission of the company is to convert capital into credit. I think it's reasonable for us to strip 80 to 90% of the risk and 80 to 90% of the volatility off of the capital, right? If you're being very simplistic, right? I mean, I start with $10 of Bitcoin, I issue $1 of credit,
Right.
right? So we can step it down from a 50 vol, 50 ARR asset and turn it into a 10 vol, 10 ARR, right? A 10% dividend yield. We can't create digital capital, right? I mean, that's the world, right? You need 700 million people in the crypto industry, and you need all of the decentralized holders and the people we don't know and the people we know and all the buyers. And it goes without saying, it's an asset without an issuer. We're the beneficiary. It's very clear to me, right? I can buy $1 billion a week for the past 2 weeks. The price isn't paying attention to what I'm doing, right? And that's good. That's a good thing, right? It wouldn't be a stable digital capital network if anybody could influence it,
That's
right?
right.
And so the digital capital layer is a global phenomenon that's been running since Satoshi, dropped the white paper, and it will keep running, and there will always be actors entering the space. The CFTC, the SEC, the BlackRocks, the Vanguards, the JP Morgans. I mean, they're all players in this space, the foreigners, the people you don't know. Didn't we just hear the Chinese shut down a bunch of Bitcoin miners?
Saw that yet again.
They banned Bitcoin mining for the 6th time
Yeah.
in 12 years?
That's
It's
right.
seems like every 2 years or 3 years they shut it down, but it just doesn't go away now, does it? So digital capital is a global phenomenon. We are beneficiaries, and we acknowledge that. And we build our company on that. Our job is converted to digital credit. And I think that's the one thing we can do well. And if you want to create digital credit, You need to be monomaniacally focused on digital capital. And, for every $10 of Bitcoin I hold on my balance sheet, I can probably create $1 of credit. You might even say, if you're being concerned, per year, by the way, you might say for every $10 of equity capital, I can probably create $1 of credit per year, right? And I can do that responsibly. And so over time, Bitcoin's growing. We're layering on more credit. We're feeding the digital capital ecosystem. We're building our balance sheet, et cetera. But now that third step, creating digital money, you need the crypto entrepreneurs, you need the crypto exchanges, maybe you need the Binances, you need the Coinbases, maybe you need the proof of stake chains, maybe you need the crypto, how many different entrepreneurs have created a stable coin?
Yeah.
Right? You need them. You need fund managers, right? You need the private fund managers, the Bloomberg jockeys. Like, I got hit with, $150 million of redemption today. I'm going to sell down the currency equivalents. All of a sudden, I'm 95% credit, 5% currency. Now I have to rebalance back to 80% credit, 20% currency. I'm trading, I'm managing, I'm hedging. And so you need the fund managers. Then you need, you need the fund managers, either private or public managers, to actually create the digital money fund. Then you need a crypto entrepreneur to create a crypto coin. You need a public ETF manager to take your fund public. Right? A pretty big idea is I take private funds public. We forget, but the original tokenized fund was an ETF.
That's right.
Right? I mean, and believe it or not, the world's still full of a lot of asset classes that yet to be put on an ETF. Go try to buy an ETF that reflects a bunch of old masters' paintings.
Yeah.
Can't do it.
Right.
Try to buy an ETF that reflects New York City real estate and passes you through a dividend which reflects the rents. I
don't know of one.
Yeah, but the point is there's a lot of financialization to be done on traditional ETF rails.
So we shouldn't be surprised that we're not there yet on Bitcoin rails. That's the 10 years, 20 years we're talking about.
Yeah, BlackRock's done, 1,000 ETFs, but they still haven't done, the 10 that I want.
Right.
Right? And then, of course, you need the banks. Right. What's the value added of a bank? Well, okay, the bank first they got 10,000 salespeople. Then they have a brand. Then they get the banking regulator to approve it. Then you've got the platform, right? All sorts of platforms. Then you've got the account. You strip the vol. And then you dispense daily doses of dividends. You deal with the tax compliance, the legal compliance, the KYC compliance. Some dude wants to buy $10 billion of digital money, and believe it or not, if you're the first bank to offer digital money in the Middle East, and some guy wants to wire you $10 billion to buy it, you still have the AML, KYC, the compliance issue, and you got to jump through hoops to do it. So the way I see the industry evolving is the first layer is completely decentralized. The second layer, digital credit, is going to be created by companies like Strategy or MetaPlanet or Strive, right? A treasury company that's monomaniacally focused on creating digital credit instruments. And then the third layer is really up for grabs. There's 1,000 banks that could do it. There's 1,000 fund managers that can do it. There's 1,000 crypto investors or entrepreneurs that can do it. And the truth is they are all adding value, right? Whether it's technical, right? Do you have the technique to put it on the platform? Everybody's got a platform. We'll debate what's the right platform, right? There's going to be a big debate. Is it a crypto exchange? Is it a proof of stake network? Is it Aladdin that BlackRock runs?
Right.
Is it the in-house JP Morgan or Morgan Stanley or Goldman Sachs network? Is it a regulated digital exchange? There's, Europe has got one currency, 27 sets of regulators, 27 different exchanges, and 27 capital markets. And you're thinking you want to distribute there, right? So I think that The exciting thing for us is what we realized is our mission is create the digital credit, but we have an incredibly compelling partnership opportunity or a partnership proposal. If you're the most digital forward bank in Australia, you want to create digital money in Australia, I have a deal for you.
Interesting.
Right? If you're the most ambitious bank in the Middle East and you want to create digital money, well, the first bank that does it is going to attract $1 trillion of capital. Do you want to be that bank? Do you want to be that city-state? Right?
Yeah.
Some people, some city-states will miss it. You've got nations that are more concerned about losing control. They would rather shut down the technology because they're afraid it might be too useful. Right?
Yeah.
So you have some that won't move. You have some that don't even get it, right? They don't even notice it's happening. What is the digital asset thing anyway? What is this good for? And they're like digital beanie babies, right? And then you have some people that get it. It's like, oh, money moving at the speed of light, economic immortality, and maybe we can program it to think 1 billion times a second, right? And I think that the ones that get it, now it's going to be a competition. There's going to be a question of who wins. And it's team sport. You need the bank. You need the bank regulator. You need the fund manager. You need the partnerships. Right? And then you need to coordinate, all of those. And then there's a technical component. And there's a question of, are you willing to take a risk and can you market it? And, the likelihood that is that most people will be followers, but there's always going to be a leader, or a couple of leaders. And this is a battle for the future of money. And we're talking about, easily $200 trillion up for grabs there, but it's going to be $400 trillion in 10 years. And whoever actually creates digital money is going to grab 10, 20% of it for sure. You won't convince everybody. There's going to be a world of people who are going to think, well, I just don't trust that. That's too good to be true. But, roll the clock back. When people talked about Bitcoin, they're like, yeah, well, it won't work. Oh, well, if it works, it's too good to be true and the government will take away from you.
I mean, eventually the horse-drawn carriage pilot still buys a car one day.
But imagine a world where 10% of that money flows into digital funds and digital banks and digital bank accounts. And that's a profoundly disruptive world. And we will create the Switzerland of the 21st century. It'll be the world banking capital. And I'm hopeful it's in the U.S. I don't know why it wouldn't be in the U.S., but if it's not in the U.S., I wouldn't be surprised if it doesn't pop up in the Middle East, because if you appreciate technology and you understand digital assets and you appreciate banking and you like money, the most profound idea I have for you, it's why don't you just attract all of the capital in the world into your bank, into your state? Because Lord knows right now, the traditional 20th century banking establishment has a proposal, which is give us your money and we'll give you nothing.
Yeah.
We're going to offer you return-free risk for all of your assets. You're taking duration and credit risk that does not offset, with yield that does not offset the duration risk and the credit risk. So pretty much you have hundreds of trillions of dollars, which is returning, inflation adjusted nothing.
Yeah. Well, below real inflation. I want to ask you a question, Michael. You said that your strategy is monomaniacally focused on this digital credit creation. Is that a reason why you wouldn't maybe use some of your Bitcoin to buy a Bitcoin business that could generate more Bitcoin? Is it not pristine enough to be the credit issuer if you also have other operating businesses inside strategy?
Put simply, we expect Bitcoin to appreciate 30% a year for the next 20 years. That is our risk-free rate. Like, that is literally the hurdle rate. I can acquire Bitcoin at 1 times revenue. It's a monopoly on digital capital. I can acquire the world's reserve capital network at 1 times revenue, growing 30% a year for the next 20 years, risk-free, integration-free, overnight, no questions asked. What could be better than that, right? Nothing could be better than that for us, right? Once you've actually established, yourself on the Bitcoin standard, And once you've rotated your shareholder base, right? The important point is not that everybody agrees with me. The important point is that all my equity investors agree with me. You see, our company exists to acquire Bitcoin. So if you brought me another option, you said, well, Mike, I've got this great startup and it's going to grow 40% a year for the next 20 years and emerge as a monopoly in the world. And I'm like, okay, that's great, Alex, but it doesn't sound as good as the deal I already have going. Like, what are the odds that you just found the next monopoly on money in the world growing 40% a year for the next 20 years? And by the way, let's say that you're a genius and you found it. What are the odds I can convince all my equity shareholders that it's better than Bitcoin?
Unlikely.
Yeah. And why would you, and by the way, why would you want to? Right? I mean, if you already have a risk-free rate of 30%, if you can buy it at 1 times revenue, and if you can integrate it overnight, why would you do anything else? So I think, for example, let's say there's 100 companies out there that are trading at a discount to NAV.
Yeah.
Okay, well, the world's full of private equity funds that have a mandate to invest in 20 non-correlated investments, and their hurdle rate is 10 or 15%. And they're actually suited up to deal with all the social issues and the headaches, right? They sit on boards, they hire and fire entrepreneurs, they integrate people, they lay off people, they fight with lawsuits, right? So it makes perfect sense for a private equity fund or a public company with a roll-up strategy to buy a bunch of businesses. If you believe in diversification, right? We don't, right?
Right.
We don't believe in,
You said, what was that great quote? You had, what do you have, one screen? You only have one screen? You have one chair?
I got one chair.
You're sitting on one chair right now.
I got one chair.
You don't have 2 chairs.
I don't believe in diversifying the fuel source that flows into your jet engine.
Yeah.
I believe in kerosene.
Yep.
I don't believe in diversifying the metals that make up the airplane wing. I believe in aluminum. I don't believe in diversifying, the composition of your semiconductor chip,
Right.
It's like you ever seen an NVIDIA data center? How diversified is the chipset in the NVIDIA data center?
Yeah.
Right? And I actually believe that when you find the solution, then you pursue it. But my point really is the world's full of people that have large pools of capital, and their mission is to make diversified investments, and their hurdle rate is 10%. And if they actually clocked 12% a year after lots of effort, they would declare victory, and their limited partners would say that was a great year, right?
Yeah.
But here for us, that's not us. And here's the problem. My hurdle rate's 30%, integration-free, risk-free. I've done the same deal 90 times in a row.
Mm-hmm.
And the product of the company is digital credit. What we're offering is STRC. We're offering you a product that's going to pay you a 10% dividend yield with a very tax-efficient return of capital dividend, right? And so if I'm offering you something that pays you 10% dividends in a credit universe that offers you 4%, give me one reason why you wouldn't buy that. Why is it that the entire world wouldn't sell their $100 trillion of garbage credit that yields you 1/3 of what we're offering after tax? Why wouldn't you just sell it all and buy Stretch? Give me the one reason. Right?
I'm not going to come up with one on the spot, I don't think.
Okay. Well, so I'm going to give you 2 reasons.
Okay, let's hear them.
You haven't heard of it. You don't understand it.
Yep.
And the second reason is you think that the issuer has a credit risk. So
yeah,
when we're going off, you bring me 10 good deals and I buy 10 companies and I get distracted by that. I'm so distracted by that. I'm on CNBC talking about all those other things. I'm not talking about Stretch, STRC. And then you're a credit investor, and, when the message is, I have like $5 of capital for every dollar of this instrument, it's like, I get it. But then you're like, but tell me about this other thing you just did. And I heard they're getting sued, or
I see it.
that's going to take a year.
It distracts you. It creates credit risk for you.
You're
just 'cause you're
creating opacity and you're creating a dilutive distraction. You actually get a diversification discount. Like the person buying this instrument simply wants to hear you have the money to back the instrument.
Right.
Right.
It's
And
almost like a collateral mix that gets more complicated. They want the digital capital under there. They don't want this business doing this weird thing and that other business that may or may not do well this quarter.
if I just spent 5 years every day of my life for 5 years to explain and convince you that Bitcoin is digital capital and I have a lot of it,
Yeah.
you think I want to show up in the 6th year and explain that I also started buying these other 16 undervalued companies and we're really good at doing takeovers and integrating them, and it's
That would seem strange for you to do. I get that.
Again, it's a distraction for us. We've got, in my opinion, we have the world's greatest product.
Yeah. But what about buying other like distressed Bitcoin treasury companies that are trading below
Again,
NAV?
the point is it's a distraction.
Yeah. Just
Why
the
would
process of doing it.
How long do you think it takes to close the deal?
Yeah.
A year?
Yeah.
It takes a year to close the deal. Do you know all of the liabilities that are embedded in the balance sheet? No.
Right.
When do you find that out? In
Some
6
point.
months?
Yeah, some point
9
during
months?
the process, I guess. Yeah.
The point is, why would I buy Bitcoin with all of the whole message for 5 years is Bitcoin doesn't have employees. It doesn't have management teams. It doesn't have counterparty risk. It doesn't have supply chains. It doesn't have leases to break. It doesn't have Nexus. It doesn't have all of the 30 pages of liabilities that companies have. So why would I want to go and buy 30 pages of liabilities?
It'd be like Bitcoin wrapped in a giant cluster.
Yeah, and here's the point, right? I can build a digital building in one day with no risk. Why? You're like, okay, well, I can do this in one day at 1 times revenue. You've done it 90 times in a row. And then some dude comes along and says, well, I have a building this summer that'll take a year to close the deal. And I think it's like a 20% discount, but I'm going to need you to sign up to unlimited liability for the next year.
Right.
And I need your investors to sign up to unlimited bottomless lot. Maybe the deal won't close. Maybe you'll get sued for $18 billion of intellectual property rights, shareholder litigation or something.
Right.
Why? It's like penny wise and pound foolish.
It's smart.
Why would you absorb unlimited bottomless liability and distraction when, it's like, don't look a gift horse in the mouth. You get the chance to buy Bitcoin with zero risk, zero integration headache, and you put it out on the wire next Monday, and everybody understands whether the risk profile. You understand, like, if I buy $1 billion of Bitcoin, you're the investor, you can see immediately whether the risk profile of the company increased or decreased that minute.
Mm-hmm.
If I enter into $1 billion of corporate acquisitions, you will not know for you might not know for 10 years, Alex.
That's right.
You understand, like if you buy a company, you could have embedded liabilities in the company that you don't know about for 10 years.
That's right.
It destroyed HP.
Yeah.
You remember the HP acquisition when they bought Autonomy and they paid $10 billion for a company that was worth $1 billion? They took a $9 or $10 billion write-off.
Yeah. Yeah.
Let me say it a different way if I'm not enthusiastic enough in my answer.
It's good. It's a good answer. I get it.
I watched 100 companies in my industry go bankrupt over 30 years.
Yeah.
Go out of business. 100 companies. You know how they all failed? Dilutive acquisitions. If I had to trace the number one source of a failure of a publicly traded company, it's the CEO starts doing roll-ups and buying other companies that they think are helpful. Every single competitor of mine, they did these acquisitions, and you end up just buying a company, overpaying. Then you buy another company, you think you got a good deal, and it blows up in your face. And you buy a third company, and then all your good employees quit because they hate the fact you bought the third company. You buy the fourth company, and your shareholders quit. You buy the fifth company. And eventually you're on the sixth company, your financials collapse, your stock collapses, and you sell yourself. And you get amalgamated into the great beast of some mega software conglomerate.
Yeah.
and you can't remember their names, probably. That's where you go to die. And so I think you buy things when you run out of ways to grow. Okay, but here's my idea of how I'm going to grow. I'm going to sell a digital credit instrument that's going to give you a 10% dividend with 80 to 90% of the volatility of Bitcoin stripped off it. And I'm going to sell it to 5% of the credit market. And that's $15 trillion by my calculation. Right now, $30 trillion in 10 years. So I have an idea for $30 trillion.
That's a pretty big idea.
And you're telling me I should come up with a second idea? And I'm like, and the only thing that's the number one way to destroy or undermine your first idea for the 30 trillion is to come up with a second idea and get distracted, take on other credit risk, right? Take on other distractions. And so let me make one more point, Alex. Like I mean, the other day I checked, we have like $60 billion of capital.
Yeah.
You understand? We could buy anything.
Right.
Right. Yeah. You understand, like investment bankers, like we could buy half of the Russell 2000.
Yeah.
Right. We could buy half of the publicly traded companies or merge with them. We could probably merge with or buy 37,000 public companies and 37 million private companies. And we could invest in every idea you could possibly imagine. We could also raise $1 billion from any credit investor in a week, maybe overnight if we wanted, right? When you start with $60 billion, it's not hard to find someone that will lend you $1 billion.
Right. That's right.
Every one of those ideas would be dilutive, distraction. And the number of bad ideas that people throw at you goes up exponentially the more money you have. And
how many bad ideas do you hear?
It's like,
is it endless?
We could be an insurance company. We could do reinsurance. We could underwrite this risk. We could become a bank. We could become a commodities trading exchange. We could, like, never ending. I could literally list you 1,000 in an hour, and then I could tell you the 100 reasons why each of the 1,000 doesn't make sense. And after I gave you 100,000 reasons for not to expand, I would reduce it down to the simple maxism that Marcus Aurelius gave us 2,000 years ago. Just because you can do a thing doesn't mean you should do a thing, right? And I think humility dictates, if you have a good idea, right? The most important days of your life, the day you're born and the day you figure out why. Okay? The arrogant guy thinks he was put on earth to solve 100 problems. The humble person, if they're fortunate enough to think they're put on earth with a mission to solve one problem, you just got given a gift, right? And so what we figured out is we can create digital credit, and it's better than $300 trillion of other credit. And whether or not it solves 1% of the market's problem or 5% or 10% or 20% or 0.1% doesn't really matter, right? It's a life's work to create good digital credit. If you're fortunate enough to be given the opportunity to do something, you should laser-like focus on that thing. Because you want to look at the history of failure, it's alpha males that solved one thing and think that that's solved and done, and they come up with 10 more things to solve.
Yeah.
Right? It's the Napoleon complex.
Yeah.
It's like, I now have to spread the French language and the French way of life to the frozen steppes and the tundra of Russia in the winter. And somehow, have you ever gathered 10,000 of your favorite friends and tried to walk across Europe? Like 1,000 miles. It's not a good idea in the 21st century, but somehow Napoleon got the idea that he might march 600,000 people, from Paris to Moscow in 3 months, conquer the nation, declare victory, and come back unscathed. It was never a good idea.
Yeah.
But it was the 14th bad idea he'd had in in 14 years. But hope springs eternal. People come up with these outrageous, ridiculous ideas. And it's like, maybe you might want to have just noted that the odds of a Corsican actually rising to rule France were like 1 in 100 million.
Yeah.
And stopped there.
And just let it ride.
Instead of we got to conquer Egypt, and we got to conquer Germany, and we got to conquer Spain, and we got to conquer UK, and we got to conquer Russia, and we got to conquer Poland, et cetera, et cetera, et cetera. But it happens. It continues to happen. And I will get never-ending number of pitches for one more thing that we could do. And I would say you come back to Steve Jobs, right? And he just reminded people we say no to a lot more things at Apple than yes.
I think this is a good answer.
Right?
You've
focus.
I can't imagine how many people are asking you that question. Well, surely you're meant to do something with your Bitcoin. And of course you are doing this credit creation. But what about the other Bitcoin?
The most profound idea, right, is put it in cold storage and sell $1 of credit every year. It's a profound idea. It's just not their idea.
Yeah.
Right. So the point is like,
Yeah.
It's not their idea and they're not getting paid money on it. So people are going to pitch you their idea and they're going to either belittle, ignore, or ridicule your idea.
Right.
Because it's not their idea and everybody kind of feel, and there's another thing, which is a lot of times people feel like they need another idea, like, after they had the last idea, and they underestimate the amount of maintenance and investment to actually nurture one good idea.
You have nurtured it too. This has been a significant evolution too. Would you ever thought in the summer of 2020, I think Matt Walsh from Castle Island Ventures was the first person to see your filing in summer 2020 that you were buying Bitcoin with then MicroStrategy. Could you, because this is an evolution since we've known each other, what would your 2020 self think about where you are now in going into 26?
Well,
because this is you built a juggernaut out of this idea.
My philosophy, and you could see it when I wrote the Mobile Wave, I just said technology is acid and it dematerializes products and services and it transforms. And if you have enough imagination and talent, you can create something magical that changes the world for the better. So my ethos, right, is the ethos of an engineer. Look at technology and figure out how to create something which is good for the world, right? Engineer a better world. And I tried a lot of things, right? I mean, and I tried a dozen things that did not fly. Usher and Emma and Alert and Alarm and Wisdom and Angel, so many things.
Yeah.
And in 2020, right, in a time of frustration and desperation, we discovered Bitcoin. And we grasp on it as a way to benefit our shareholders and our employees and our customers. And it was first an exercise in frustration and desperation. It really was a do this, or suffer a painful death.
Yeah.
Right. And then it became, an exercise in transition and adventure. It's like, now that we've done it, what are we going to do next? Okay, someone will loan me $1 billion for free. Well, a year ago I was looking at winding up the company, and now I have a chance to actually buy $1 billion of Bitcoin for free. And then it was adventure and opportunity and challenge and response. It's like, and it was a journey, and it's a journey of discovery because we went from being a software company to being a structured finance company, right? It's like first we did senior credit or senior debt, and that was a weight around our neck, and then we did asset-backed financing, and that didn't work well, and then we did OTC, over-the-counter financing, and we learned the limitations of that, and then we did convertible debt, we learned the limitations of that. And as we moved through each iteration, we realized that there were some extraordinary technologies, and we're engineers. We put together about 6 components, right? One was a preferred equity, right? And most people had never used preferred equity to create credit. And the second was a public offering. We did one public offering in 1998 for like $48 million or something, 40-something million.
Yep.
And then we did a $500 million, a $600 million, a billion, and a $2.5 billion, and a $700 million IPO this year.
Basically this year, yeah.
Bam, 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 bam. $5 billion type public offerings. Okay, so we harnessed the IPO, and then we tacked on the at the market shelf registration. So we tacked another thing onto it, and then we borrowed everything we learned about the ETFs. You know, we studied ETFs and we watched the success of BlackRock, and we said, how do we create a credit instrument that has all the strengths of an ETF, that has the power of an ATM, that has the power of a publicly traded security, that has the flexibility of a preferred equity, that has the volatility and the performance of digital capital.
Mm-hmm.
We put all those together, and then we plug that into digital rails. Like, we use this phrase, do you want to do an OTC deal or do you want to do a public deal? Okay. The investment bankers will pitch it like those are equal.
Yeah.
And actually the bankers will tell you the OTC deal is easier. Let me tell you the difference. An OTC deal is one bank calls 37 of their friends into an alley and we trade baseball cards.
Right.
And a public deal is, okay, we create a security that 200 million people can buy and sell every minute of the day, everywhere in the world. And you tell me, you think they're both equal ways to raise capital? Right there. I'm going to sell you a credit instrument. Do you want to trade it, in the back alley with like 12 possible buyers?
Right.
Or would you like to actually be able to post it and sell it to 200 million people in the world every second of the day? It's like, they're not equal, right? One of them is better than the other one. And so this was a journey of discovery. And at the end of the day, we had to understand credit instruments. And by the way, bank deposits are the worst. Margin debt is pretty bad.
Right.
Junk bonds are pretty bad. Convertible bonds, unsecured, less bad. Over the counter, not great. Preferred equity, that's perpetual, better.
Mm-hmm.
Public preferred equity, better. Public preferred equity with the shelf registration, best. With a QSIP, no. You want a 5-letter ticker? No. 4-letter ticker, word you can pronounce, IPO'd. By the way, in Europe, not quite as good. We took Stream Public in Europe. We're still trying to get it to trade properly for the retail a month later, right? You take it public and we get these things strike, stretch on the NASDAQ within 5 days.
Right.
Right? Not all capital markets are equal. Guess what? The U.S. capital market is better. How much better? A lot better. So as we actually move down this journey of discovery, we went from adventurous and opportunistic and strategic to eventually transformational, and then we realized that we had actually created a better credit product. And I would say those first 4 years, the equity was the product. The credit was the tactic, right? We sell the bond to actually create performance in the equity.
Yeah, as an alternative to...
And that was fine for those 4 years because there was no other equity product. And I meet people in, UK today. They're like, hey, I bought your equity because I couldn't buy anything else with Bitcoin exposure and my retirement account, right?
Right.
So the equity is product. And then in 2025, we discovered digital credit. And that culminated in STRC, where we realized... what's the ideal product? I strip the delta, I strip the vol, I strip the duration.
Yeah.
I just hand people the yield. And if I hand people the yield in a tax-deferred dividend, how many different layers of innovation have I stacked on top of the credit world, right? Appreciating collateral, publicly tradable. By the way, it's illegal for a retail investor to buy an OTC instrument. Mm-hmm. Now, we talk about like being debanked and being blocked, right? And the entire digital assets revolution is about, an egalitarian, utilitarian movement to empower the masses. And, while we're empowering the masses, maybe empower the computer, right? Like, what if we had digital assets that AIs could trade 1 million times a second everywhere in the world without asking permission before they actually made the trade?
Yeah.
Right? And we kind of stepped through that, and we had to we had to kind of get a PhD in capital markets and credit markets and securities markets, and then digital assets and digital capital. And that was a 5-year journey. But I would say at the end of the day, the philosophy underlying all this is, can you actually take all of these components that have been lying around for 30 years? ETFs have been around for 30 years. The most successful ETF plugged Bitcoin into it. Mm-hmm. Michael Milken will tell you he invented the ATM offering. We're the most successful issuer of equity via an ATM. And he invented the convertible bond market. We're the most successful issuer of convertible bonds. So we took all these ideas, plugged in digital capital, plugged in a public company in the U.S. capital markets with a bit of ambition. Mm-hmm. And then the truth of the matter is, even this last step, digital credit, it's not happening, Alex, unless we had digital intelligence, right? Because what happened in 2025 was the AIs got smart. Mm-hmm. And people are like, oh yeah, they're just kind of idiots, and they parrot back to you. Well, let me tell you, when you actually take the idiot and you parrot back and you do it 1 billion times and you loop it back on itself 10,000 times, you let it spin for 10 minutes, mm-hmm. It's pretty smart.
Yeah.
Right? And
right.
So,
you talked about that a few months ago in New York at the Treasury Company Conference about how you and Strategy have used AI to help design this new credit complex that you've created.
Yeah, no one in this entire digital asset space, and probably just a handful of companies, ever put an at-the-market shelf registration on a preferred equity.
Right.
Nobody ever created a variable rate preferred equity. Like, can I create a monthly dividend that trades stable around par and adjust the dividend every month? Ask every lawyer and every banker. It's never been done.
Right.
We don't know how to do it. Ask the AI. Yeah, sure. You can totally do it.
Yeah.
Okay. Why? They have no pride of authorship. They don't, no company ever went to Europe and sold a perpetual preferred equity. Well, we just don't do that in Europe. Okay.
Why not?
Why don't you do? Well, because all the other issuers didn't have digital capital. And so you had to have the right combination of circumstances. You needed a block of digital capital, and you needed digital intelligence. You need to have the will to create digital credit, so you create digital money. And they all had to click. And then once you have that clean sheet of paper, right? And Elon Musk talks about it all the time, right? It's like, he's like, take a clean sheet of paper. The biggest mistake engineers make is optimizing a part that shouldn't exist. Right?
Yeah.
It's like,
Talk about how deleting code is better than writing code a lot of the time.
And my book, The Mobile Wave, I lay out, the critical component technologies in the iPhone. If you don't have the right battery, the lithium battery, you don't have the right, touchscreen LED, there's no iPhone. Mm-hmm. And it's like, what did they do? Well, they left out the keyboard, and everybody else like, there's no keyboard. Mm-hmm. Where's the keyboard? It's mm-hmm. like, well, that's a moving part, a lot of moving parts that should not be there. And after a while, you look and you're like, well, wait a minute. You get rid of the keyboard, and all of a sudden you have infinite keyboards, and you just talk to the phone. And why do I need, like, why do I even type in the first place?
Right.
Like, it's like, okay. The world is full of people trying to optimize a very inefficient process that should not exist. And I would say 2025 was a very special year, and it is a special year because what you have is digital intelligence colliding with digital capital, colliding with digital assets, colliding with digital markets, and a lot of people saying, why is it that I can't move everything 24/7, 365 at the speed of light 1 million times an hour while I'm sleeping because my AI was doing it for me? Mm-hmm. And the answer is, any 16-year-old kid would get the fact that that's a better world.
Yeah.
It's only the 65-year-olds that got rich in a different world, full of constraint, that don't get that.
You
right?
think AI and the overlap with Bitcoin? I mean, I didn't think that the intersection of AI and Bitcoin would be helping to design digital credit. which is fascinating that it has been. What will be the longer term impact on digital capital and Bitcoin of AI? Will the robots use Bitcoin?
Look, it seems pretty clear we're moving toward a world where 1 billion robots do all the work and cars drive themselves, and there's 1 billion AIs in cyberspace doing all the thinking for us. And you sit down and you're a professor and you're like, I never could solve this cold fusion thing. And if you wanted to solve cold fusion or create another nuclear reactor, and there'd be like 97 dudes that spent their life on it, and they'd all tell you the reason it's not doable.
Mm-hmm.
And it's just like me asking, I got an army of lawyers, I got an army of bankers.
I'm sure you
I
do.
ask the lawyers and the bankers, is it possible to do this? They're like, we'll get back to you in a month. And after a month, they get back to you and say, well, we're not quite sure, but it's never been done before. It's like, and so
You're like, I'm aware
if
of
you're
that.
willing to wait a year, a year will go by and you won't get an answer, but you go to the AI and you say, well, I have this opinion. I want to do this and this and this way. And can you figure out if that's possible? You put it into deep research mode and you grind it 3 or 4 times. It's like, yeah, well, you ought to do this and this and this and this.
Yeah.
And what you've done is, and it's very important, right? You've taken the lawyer that's read everything that's ever been filed in securities law without any pride of authorship, without an economic motive, without any prejudice or bias or any baggage, that doesn't mind if you call it stupid or you tell it that it's not working hard enough. And you've used that to get the first 1,000 man years of research done. And I'm of the opinion, now you think about the definition of a PhD, it's like someone capable of making a seminal contribution to the body of human knowledge. And there's 10 million of them, and you can't get a PhD without having written that dissertation. But the problem is by the time you get to that point, you've got so much baggage. So, you've got so much built up belief system, because human beings, we use heuristics and rules of thumb and bromides and,
Right.
Conventional wisdom in order to accelerate the human brain, because you just can't be the alpha zero, right? You can't consider the full state space of options, and you can't go and read 100,000 books every time someone asks you one question. So you have to kind of just fall back on, these simple bromides or simple conventional rules. And so you're taking shortcuts because of the limitations of one human brain. The AI doesn't have to take the shortcut. The AI can say, well, actually, I did read the 100,000 books, and I actually found an example. And so I think we're moving to a new world, and the new world is, 1 billion people do the work of a PhD, and 1 billion people solve 1 billion problems, and they have the equivalent of 10,000 hyper PhDs that think 1 million times faster, that work 24/7, 365. And what happens when you actually tell the AIs to grind the AIs, and you unleash 1 million AIs to tell 1 million AIs to do it? And, the real evil genius guys are like, well, I create like 5 AIs in a committee. I make them fight with each other, and I make them take the opposite points of it until, they've ground through the thing. And I'm like, oh, that's really wicked what you're doing there. And so I think we're in a whole brave new world, and there's two types of thinkers, 2 types of systems, 2 types of corporations. There's the person that says, oh, digital assets and digital intelligence, I can do everything 1 million times better, 1 million times faster, 1 million times stronger, and the world's going to be 1 million times better.
Mm-hmm.
And then there's and I'm going to do it with intelligence, digital assets, and digital intelligence. And then there's the other side. They're like, we don't want the AI to give you the answer. We don't like the answer. Please don't use it. It might be a security leak. I've literally met people where they're like, my legal department won't let me use the AI to answer this question. Yeah. Just like those teachers are like, we don't want the students using the AI. Are you kidding me?
So they haven't figured out how to let them use it yet.
We're bragging. Well, the kids used the AI, and the problem was the AI gave them an answer. So we had to train the AI to not give the kids the answer. It's like, oh yeah, well, the kid got a jackhammer and jackhammered through the mountain, but that was a problem because we really wanted them to bang away on a rubber mallet like we did. Like there's literally people that are afraid the technology might work too well, and we just have to dumb it down, right? Make it woke, make it stupid. What if the 12-year-old actually got the answer? Well, we really want them to. We want them to like take the shovel and dig the hole because that's how we used to dig holes with shovels. It's like, the kid figured out how to hijack 1 million robots to like build a new city and we live happily ever after. And then the kid cured cancer and 3,700 other diseases, but that's cheating because we really wanted them to like work slower. It's like, there are going to be governments that want to slow it down. It's like you see it right now in authoritarian cultures. We don't want people to move money too fast.
Yeah.
We don't.
Right.
We don't want someone to accomplish things on Saturday afternoon. When the Puritans showed up in Boston, if they caught you working on Sunday, they whipped you.
Yeah.
It's like it's a religious thing sometimes, or it's a political thing.
So interesting.
And so just like, the Japanese didn't want explosives to corrupt their military system. And the Chinese, you had a centralized emperor in China, and he actually kept modern munitions technology out of China. That worked until the British warships showed up and sailed up the river, and then that didn't work anymore,
Right.
If you read about the Opium Wars.
Yeah.
Right. At the end of the day, you can slow down the advance of technology only for so long. And you put your head in the sand, and then at some point, someone that doesn't happen to share your fear of the technology uses it to send a robot-driven swarm army, right, to topple your particular political system. And then people are like, oh, yeah, well, I guess airplanes work, when they start dropping bombs on our head. It's like, they're not using horses on us anymore. They used, because machine guns and tanks actually seem like a better idea. And it's like the general subtext of that is paradigm shifts come when the old guard dies or when there's a war. And science advances one funeral at a time, right? And that's how this stuff is going to advance. And maybe the death will be the death of the bank. Maybe it'll be the death of the corporation. Maybe it'll be the death of the city-state. The banking capital of the 20th century won't be the banking centers of the 21st century. Because the money will move.
Very interesting. Before we wrap, I got a couple other quicker questions. What about quantum computing? People must ask you this. They've been asking me for 5+ years. Will a cryptographically relevant quantum computer pose a threat to Bitcoin? And if so, how should the Bitcoin world be thinking about mitigating or defending against that threat?
Yeah, it's a reminder that a pessimist imagines a problem and thinks the world is doomed, and they kind of feed on their pessimism and gloat over it and glee. And the optimist imagines the problem and sees us solving the problem and how the world will be a better place. So let's take quantum computer. Okay. There's going to be a point when the world will form a consensus that there's a quantum threat. We're not there now, but you won't miss it because the United States government will direct all of the defense contractors to upgrade their encryption algorithms to be quantum resistant. Mm-hmm. And Microsoft and Apple and Google will ship a quantum upgrade. Mm-hmm. And your bank, let's say you've got your money at JP Morgan, they will ship an upgrade and they will say, there's a need for us to upgrade our encryption algorithms. So please install the new client software and re-authenticate yourself. And you've got X days, 90 days, 30 days, whatever number of days to do this. And if you don't, we're going to freeze your funds for your own good. Okay, it's not that complicated. Every single system on Earth, every iPhone, every Android phone, can you imagine you walk into the office and your boss says, your IT guy goes, we need to upgrade our software to be quantum resistant now. And you're like, well, I just decided I don't want to. Okay, well, that's a condition of employment. How many people are going to say, I just decided I didn't want to upgrade the software? You're not going to have a job. You're going to come back from the border and they're going to say, you need the quantum resistant border software. You're like, well, I just would rather come back to the country without it. You're not getting in, right? And so at the point where we have global consensus, it's like Y2K, it's like anything else. There's not going to be a debate. The Bitcoin network just runs on software. There's going to be a quantum upgrade. It's going to have quantum resistant encryption libraries. I wouldn't be surprised if they're not the same libraries that are in the iPhone and the Android phone and the Microsoft network. It's going to be a global standard and people are going to debate it. We're going to roll out the system and then everyone is going to upgrade to the software. We're going to re-encrypt all the Bitcoin and all the wallets and anything that is susceptible to quantum threat. It's going to get re-encrypted if the holders of the private keys are alive and if they like money.
Yeah.
If they're dead, they're not going to re-encrypt. And if they've lost the keys, they're not going to re-encrypt. This is going to be a massive upgrade to network security, and it's going to be a massive deflationary event. And we're going to get the answer to the age-old question, how much Bitcoin's been lost? And if the number is 5 million, we're going to see that the supply of Bitcoin is going to go from 21 million to 16 million, and the price of Bitcoin is going to go up.
Interesting.
Right? And ultimately, the quantum leap, call it the Bitcoin quantum leap, is going to be the best thing to ever happen to the Bitcoin network. Right? And the only difference between the way that a bank handles it and the way the Bitcoin community handles it is because we're global and more decentralized. We're probably going to do this not over the course of 30 days or 90 days. It'll probably take 2 years or 1 year.
Right.
Or some amount of time. But, you're going to argue to me that some dude that's got $1 billion of Bitcoin is going to decide they just don't want to upgrade? I don't think so.
Yeah.
Right? And in this particular case, you could say, the haters, the skeptics, like, well, you're not going to get consensus. Really? Like all the smart people with money in the world that thought it was smart to put their money on the crypto network, you think they're the people too stupid to want to upgrade? I think you're going to get consensus. Like, well, it'll be too decentralized. You know how decentralized the United States government is? Right? You realize how many defense contractors there are? Like, the Walmart supply chain, if you actually look at the supply chains in the world, there's 100,000 companies that are all going to have to upgrade. They're going to figure it out, right? And so in this particular case, there's going to be an upgrade. The network security is going to upgrade. The wallet addresses that don't upgrade are getting frozen. No one's going to complain because the only people that don't upgrade will be dead people.
Got it.
Right? And the dead are not going to complain about it.
Yeah.
And those that lost their wallet, they lost their private keys, it's not going to matter. It's going to be a good thing. And this is just a natural challenge and response. The network is going to be strengthened and hardened by this because intelligent people normally respond to challenges in an intelligent way. The only people that think the community won't are people just hate Bitcoin.
Yeah.
They hate the Bitcoiners, they hate the Bitcoin community, or they have a personal agenda of spreading fear and uncertainty and doubt for some evil, nefarious purpose, generally because they want to sell you something. They want to neg you and they want to make you insecure so you'll give them your money so they can control you or manipulate you some way. Mm-hmm. And I think it's very important to transcend that fear and cynicism and skepticism and get on with your life because otherwise you'll never accomplish anything.
I think it's a very optimistic and inspiring answer. Another Bitcoin community question. I know you're aware of this debate that's been happening. I would say mostly online, though. I mean, I don't see it much in my day-to-day in the Bitcoin world, but about non-monetary arbitrary data transactions, some call spam, right? Could be JPEGs or other sort of junk that is put on the blockchain, but in some cases could be proofs for a layer 2 or zero knowledge type stuff. But a portion of the Bitcoin community thinks these should not exist and has put forth an idea to fork Bitcoin or another one to confiscate low-value Bitcoin to reduce the UTXO set. Do you have a view on this debate, which was sort of catalyzed by the release of Bitcoin Core V30?
We should be hyper conservative about changing the protocol.
Any change?
Very conservative. And we should make sure that we have global consensus. When 8 billion people in the world have global consensus that quantum computers are a threat, I believe we should upgrade the software.
Got it.
But when half the community believes it's a bad idea and the other half the community believes, I think you should slow down, right, these changes. I think we should be very, very conservative about the default settings. We should be very conservative about the protocol. I've said before many times that if you wanted to undermine the network, the way you do it is by infinite funding of highly qualified developers and tell them to improve it. Mm-hmm. And I think at its base, Bitcoin is a monetary protocol, and the lack of rapid mutation is the feature, not the bug, right? And so I think I'm not in the camp of people enthusiastically adding features to it, and I think that, you know, the way that you wreck a good thing is you speculate that it will fail unless you add a boatload of features to it.
But they would argue, some of the fork proposers would argue that features were added to it and they want to remove them. You know, is that, but it would be a controversial fork.
Yeah. So
they're sort of saying go back to an even more conservative view of Bitcoin. So in a way, I feel like it kind of goes with
conservative, and I think if you're introducing a change which is so controversial, you might want to slow it down.
Okay, that's
right?
helpful.
You might want to slow it down.
Yep.
And you want to think a little bit. And I always think there's unintended consequences, second order, third order, fourth order, you know? And so I think it's a healthy debate. I empathize with the people that just don't like someone effing with the network. Don't F with the network.
Yeah.
Right? It's like the path of least resistance, the path of travel, the most likely outcome right now is Bitcoin emerges to be a $200 trillion world reserve capital network. And everything you think is a bug is probably the feature. That's probably the reason it's succeeding.
Yeah.
And when you try to fix the things that you think are the bugs, you might not. And that's why even if you take the elephant in the room, like the quantum threat, I'm not in favor of rushing it.
Yeah.
It's like I think that rushing, to solve global warming, for a while people thought, aerosol spray was going to destroy the ozone and kill us all. It's like there's always something. And then they thought nuclear energy was going to kill us all. And then they thought blah, blah, blah. If we don't go to solar power, it's going to kill us all. And then they thought the ocean was going to rise and flood Miami Beach and it's going to kill us all. And all of these things are normally alarmist. And what follows next is a law that taxes everybody, or restraint of trade, or therefore I'm seizing control of the government to prevent you from blank. And so I just think that generally we ought to be very conservative about protocol bloat. We should be conservative with the clients. I think it's healthy. It's healthy to have more clients. I think it's healthy to have people working on alternate versions of Bitcoin, and I think it's healthy to have the debate. And I think we just ought to be very, very careful with the protocol.
I think that's a good answer. Last question, Michael.
Yeah.
I would say you're the most influential person in the world about Bitcoin today. How do you think about that role? Does it weigh on you do you feel like you've got a burden to bear on Bitcoin's behalf, the millions of people?
I'm grateful to be on the journey with hundreds of millions of other people. I feel blessed to be given a mission that is meaningful to civilization. I feel like I got lucky to be granted this opportunity at a late stage in my career. I was 55 years old and I was ready to retire, quietly into the good night, and that was the end of it. And then all of a sudden this came along and I started saying that there is just a profound amount of good that we could do for billions of people if we spread, digital assets, digital capital, digital credit, and we know eventually digital freedom, digital property rights. for the first time in the history of the human race, I think Bitcoin represents the ability to tightly bind economic energy to the individual. That's the most profoundly disruptive, transformational change, in the economic history of humanity. It's got a protocol to bind economic energy to a person, a mathematical protocol, and a communication protocol. It's like language and math and economic protocol. It's pretty profound. So I feel responsible for doing my best to preach that gospel, to spread that word. Also to try to communicate to groups that don't see it that way, right? To go communicate to the bankers, make sure that you de-escalate inflammatory responses. Bitcoin represents a profoundly humanitarian, egalitarian, utilitarian, revolution for humanity. That means no government should fear it, no bank should fear it, no corporation should fear it, no mayor should fear it, no institution should fear it, no family should fear it, nobody should fear it. They shouldn't fear it any more than you should fear fire, math, English, electricity, right? I'd like to see it embraced as it's a profound breakthrough, and maybe the biggest engineering breakthrough in the history of economics, right? It's the point at which economics goes from being an art to an engineering discipline or a true science. A lot of superstition, a lot of religion and politics and economics. And there isn't so much religion and politics in rocket science, right? The way that the Russians, the Chinese, and the Americans build rocket, they don't vary dramatically. There's no one saying, I think balsa wood should be used to build the rocket, because you build the rocket, you do it wrong, it burns up on reentry. There's really, maybe on blast off, there's not really a debate, but there's massive debates in economics. And so I think it's pretty profound. I feel very grateful to have the opportunity, and I find it very motivational to have the mission, and so I do think it's energizing, and there's probably no better feeling than going anywhere in the world, walking down a beach in South America, or walking through a parking lot or on a runway in Europe or Asia, and the guy that's the taxing the aircraft or refueling the aircraft, or the guy that's parking the cars. I go to Mar-a-Lago, the guys that valet park the car, they're like, okay, thank you, like we're with you. Or the guy that's the bar back, right, at the bar, or there's a lot of people from all walks of life who have derived inspiration, and they feel like there's hope. And fundamentally, you have days where, the market's crashing and all the short sellers are gloating and they're like gleefully celebrating, can they liquidate you? And that's the negative part of the business, all of the toxicity and the hate and the controversy and the ignorance. But the part that motivates you, that you always got to stay grounded on, is the traditional finance world's not offering hope to 8 billion people, right? The conventional banking offer is, we'll take you money and give you nothing, and we'll actually keep 5% of it a year and hope you don't notice, right? And the credit market is, we're gonna take everything you invest, and we're gonna just keep 300 basis points of it and hope you don't notice.
Yeah.
Right. And your vision or your hope, if you're a taxi cab driver in Africa, well, it's like you have zero hope whatsoever until the digital assets world came along. Right. And so we're actually giving people a path forward, a hopeful future, right? A future you can get excited about for yourself, for your family, for your corporation. Create a business and put it on the global grid, and do it with 20th century finance rails in any nation in Africa or South America or Asia. I challenge you. It's impossible.
Yeah.
You can't. It's literally hopeless. And so what motivates me is, now we've got hope. We've got economic empowerment and we've got hope. And there's a million people debating, what's the right way to do it. But the point really is there is zero debate. Your economic life expectancy is short and it's going to be brutal and ugly and it's going to be a painful end if you don't have this technology. And it couldn't be clearer right now, right? That we've got modern economics that we're preaching. And there's no reason why you shouldn't actually be conveying that message to every politician, every academic, every entrepreneur, every investor, every individual, everywhere on earth, because regardless of our political and religious differences, there's no doubt that humanity will be elevated by digital assets, digital capital, digital technology. And it's a struggle worth taking on in the modern world.
There you have it. Owner, not unsurprisingly, Michael Saylor, owner of hope.com. And that was a very inspirational way to end. And Michael, chairman and founder of Strategy, as just, I forget what you said, maybe the 100th idea you guys tried, but this one has hit its stride, not to use a joke there. Michael, thank you so much for coming back on Galaxy Brains.
Yeah, thanks for having me.
Thank you for listening to Galaxy Brains, the weekly podcast from Galaxy Research. I'm Alex Thorne, head of firm-wide research at Galaxy. Follow me on X at Intangible Coins. Follow Galaxy Research on X at GLXY Research. Read our written reports at galaxy.com/research. And don't forget, if you like Galaxy Brains, to like and subscribe on your favorite podcast platforms like YouTube, Spotify, Apple Podcasts, and more. We'll see you next time.